Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday, June 14th, 2013. We'll be looking at several major markets today going around the globe. Typically, there's 19, and now there's 21. I've added the TNX, the 10-year Treasury note yield, along with the the Dow Jones Transportation. So you guys can watch those now. They're also on the website. I updated the charts there as well, short-term and long-term. So we'll be starting off from now on with 21 on Friday that I cover, so you guys know everything that I know moving into the week ahead. Starting off with the TNX, the 10-year Treasury note. This is nothing new. Same thing I said last week. I say this week. All we actually have here is previous high. We took out that level, and we're just consolidating on that. So we had a bounce up here. We pull back down. We bounce up here again. We pull back down. Note the candlestick formations near this support line. It was resistance. Now it's acting as support. Once you close above it, that's what happens typically. So when you pull back down, you should see some kind of candlestick formation that shows indecision, like you're seeing now, or support, and that's a buy pressure at this level. So that makes sense. A little pullback here would be fine. If I got a hammer candlestick formation, I'd probably mark it as a buy potential with looking for a test this high and taking that level out. I think this right here, whenever you've got this formation, you can simply take the distance from the was resistance, now support, down to the low point would be 614. Measure that distance out mathematically and then add that, and that's how high price activity can go. From a technical perspective, it gives you a target where you expect prices to go. So we still have higher short-term yield prices in the future. Looking now at the AORD, or Australia's ASX, you can see that we've had a bounce today, and that's all that is a bounce. Which price activity has actually moved higher, stopping us out, so we've locked in this gain at this point here, and then this gain at this point here. So that's fine with us. This bounce here is nothing more than a bounce at this time. Remember, you're always looking at the trend first. So the trend here is obviously down. We have lower series of highs, lower series of lows. Any bounce that comes up here, even if you took out the previous high and went up here, you'd have to do one thing, and it's pull back down and test that low before you could say, oh, maybe we have a series of higher lows as well as higher highs and then a buy signal. So in that particular scenario, you would have to wait for that pullback regardless. So there's no sense in trying to rush in here and think you're trying to call a bottom, because lots of times you'll have a different scenario that looks just like this. This is basically what we're going to do. A lower series of highs, lower series of lows. You get a bounce up here and roll over and go lower even still. So I've been looking to get short again at that opportunity presents itself. And remember, in a downtrend, the best shorting opportunities are at the 50-period moving average or above it, and so that's important to keep an eye on that. Also note that the shooting star is the thing that you want to pay attention to, and a lot of people don't understand shooting stars, but whenever they're in situations like you have right here, this marked by a black arrow here, that's a shooting star, and it's also telling you a couple things. Number one, this was support. Remember, we bounced off of it here, and then again here, and then we come over here, and we broke through it. This right now is going to be acting as resistance, so the bounce to the upside, it should be short-lived to roughly this area. You should get some kind of a shooting star, or something that tells you to get back in on the short side, and then look for a test of the low, and at that point you're still just moving lower. Looking now at the Dow Jones Industrial Average, my arch nemesis, at least for the past several months. The Dow Jones Industrial Average, all U.S. charts really have been very strong in this pullback that has affected global markets a lot more than it has the U.S. markets. However, I'm still not bullish here. I still see no reason to be long these markets. And like I said, the bounce that we saw on Thursday was a very low volume. Today's selling off doesn't give you anything different than what we were talking about before. There's really no strength in this market at this point in time. Also, I think that we're being pulled down by problems that are developing. We'll talk about them when we get to them. But the main thing here is I don't see a reason to be a buyer. I'd stay on the short side here. And again, then one of the other new charts I show today will actually show a sell point on today's activity that we're not seeing in the Dow, but it is there in other charts, so it's important to note. For those of you who haven't been tracking us and nightly market analysis videos, you know that this, or you do not know, but so I'm going to let you know, that this is the area that bulls do not want to see taken out. If we come back down here and close below this point, you're basically just going to take this out anyway. But closing that would kill the bulls. The bulls' argument would be dead in the water at that point. We would actually be proven to be peaking and pulling back down. That'd be testing this low down here. It would be the 14 area. 14.5, 14.4, and you could fall much lower from that point. Remember, global markets have sold off down to their 200-period moving averages, and so that's where I think we're heading in the U.S. market as well. So that's a long ways from where we're at right now. Looking now at the Dow Jones Transportation Average, the TRAN, TRAN, on this particular chart, it's important. If you've ever studied the Dow theory, you know that their theory states that you want to have actual buy signals on the trends as well as the Dow, and then if you get sell signals, it'll be the same way. So if you got somebody telling you that it's time to go buy the Dow and the trend is telling you otherwise, then of course you would not listen to that. And I agree with that theory. It makes a lot of sense to me. In this particular case here, here's the sell signal. All we need is confirmation 1 cent lower than today's low. Today's low is 62.99.91, so 90 would actually intraday give you an opportunity to sell. The stop was set right here at that point in time. Looking to close below this 50-period moving average. We've done it before here, here, and here. And the main thing to note, there's no support at this point down here. There's no hammer candlestick formation. So when you test it, you're going to lose that fight, and that means you'll be looking to test that 200-period moving average. Looking now at the French CAC 40 index, you can see all we've had is a little tiny bounce, and I don't expect much out of it. What happened here, we got a sell signal, and then we gapped down substantially from one day to the next, and then we've just come back up and filled that gap and just bounced up here, and we kind of sold off a little bit intraday. This is nothing new. You shouldn't have a big move to the upside here, no major bounce to try to trade or anything of that nature, simply because here is your 50-period moving average where you've got a sell signal at that point, and then another one below that point. You're in this area where you should be looking to sell, so this is something that I haven't advanced this off. I kept the stop backed off of the previous high so as not to get too close. Let it breathe, but the move is still coming this lower. You know that because there's no hammer candlestick formation at this current low point. That's not a true bottom, so we're just going to come down here and test it again. Quick glance here at the MIB, or the Milan Index. If you would like to trade in Italy, this would be one you're probably looking at, and you can see no hammer candlestick formation. The bounce here is just a filling of the gap, comes up here, and this is about as high as I think you can go. This 50-period moving average, which is going to be that sell point, where I'd be getting short if you're not already there. I'm already short in this position. Stop set off this high point here. Any bounce in this range would just be that, a bounce, and we start moving lower and testing the previous lows like we're seeing in the FTSE and so forth and so on. Quick glance here at the German DAX composite, same basic overall story. More strength here than we've seen anywhere else. That makes sense, being that they're fundamentally stronger in Europe than maybe Italy or Greece or some other chart you may be looking at. So this particular chart looks a lot more like the U.S. chart, this little trading move to the downside here. Basically nothing happening. You could still move up here and test the previous high, ergo I've left the stop at the high for this point in time. If we break down and start to slide real quick, then I'll advance the stops, lock in some gains, and start to do that kind of thing. I'll be looking for a test of this low overall. Again, pointing out, Ultimate Oscillator tells you a lot about the overall conditions and strength of the market, bullish or bearish. And Ultimate Oscillator starts to peak out at the 60 line, incapable of coming up here above that 70 line, then you're indicating a bearish market. And so that's important to take note of whenever you see that develop. Quick glance here at the gold chart. Again, I'm still bearish on this. I don't see anything that's worthy of trading. I wouldn't be dying to get short this position. Definitely not dying to get long it either. It's just basically not gotten any volatility. A good move was made here, and then we just kind of went sideways from that point here. There's nothing going on here. If you want to be a bull on gold, and I know a lot of people do, wait until you can get a close above the 50-period moving average. You can't even do that. There's no sense in even bothering with it. When you start to close above it, then you can say, okay, well, now we start to get some signs of strength and things like that. Right now, you're staring very clear away from it, and whenever you come up near it, you bounce off of it or away from it. So those are bearish conditions and not something I want to be looking to go buy. Again, point out the Ultimate Oscillator, not a buy condition. Quick glance at the Hong Kong Hang Seng Index, and this one is, I was actually watching the markets last night in Asia, and I saw the headline that there's something to the effect of, they had stabilized over there and bounced and this and that, and it's BS. The only thing that happened was some short covering into the weekend, and then they'll come back on and sell more next week. This is not a bullish condition in any way, shape, or form. You have a hammer candlestick formation, a massive gap down here. This is not where you start doing your buying. Remember, you're in an overall downtrend, and whenever you have that condition, all you want to do is wait for the next good bounce to give you an opportunity to get short again. Up here, sell signal at the 50-period moving average. That means bearish conditions. Look for resistance at the 50, like you've seen with gold and so forth and so on. So why would you be looking to buy this? I wouldn't. Quick glance here at the BSE, or the India Bombay Stock Exchange, has just basically rolled over. We talked about this back when it was happening. You had the first shoulder, the head formation, the second shoulder, and then we just made this nice little head and shoulders formation. It's a topping signal. Again, if you're getting topping signals on individual charts go around the globe, Why is it that people don't recognize it happening in the U.S. as well? I don't know. But overall, you can see that this is played out the way it was supposed to. High point of the head down to the neckline, measure that distance out from the breakout. You would say, okay, this is about how far we expect price to fall. In that overall formation, that does roughly that. It comes down here, gaps down, and again fills that gap with a bounce, just a bounce. And again, no hammer candlestick formation off the low point here. This is not going to be when this is tested, this will not hold. Ergo, I don't expect much more of a move to the upside because 50-period moving average is here, and you got sell signal here. So all this just tells me look for a new opportunity to get short if you're not already there. My stop's way up here. I gave it room to breathe. I anticipated something like this, so no big deal here. Continue to trade the trend, which is clearly down. High point here, lower high here, lower high if you want to call that a bounce here, lower high currently, low, low, lower low, lower low. The trend's down. Quick glance here at the EWJ, the Japan iShares. We told you yesterday that this one was actually in a divergence mode comparative to what the actual Nikkei was actually doing, and we showed you that chart yesterday. So today's activity, obviously erasing yesterday's advance, makes a lot of sense to us because this was just BS. We told you that when it happened, that was not realistic. Also point out a couple different things. Number one, this moved here to the downside, and you get this little pattern right here. It's just temporary. It's not finished. This move here will be duplicated out the other side, and that's exactly what you see here. Now, what do you see overall? Let's go ahead and clear that chart up a bit and draw it out for you again. You've got this move here and this little pattern here. What do you think's coming? This move here all over again out the other side, and we've already broken to the downside. If we're looking to test this low, we're going lower. That means if this is the problem, if Japan's the reason why everyone's freaking out in the global markets, then expect them to continue to freak out. Quick glance here at the London Financial Times Index, also known as the FTSE. A couple things to point out. Obviously, the support that you had here and here, no hammer candlestick formations off the lows. Ergo, when they're tested, they will not hold. And then you can see that what we did here, we pierced that trend line. I've warned before, when you pierce a trend line, you're warning that you're about to break it, and the pierce would indicate in the direction that's going to be broken to the downside. The bounce that we had here, nothing more than a bounce. I kept the stop tighter than I typically do for others that I expect to bounce. They didn't expect much here, but we actually got up a little bit higher than I expected we'd get, and then we got a sell signal anyway. So no matter how you slice it, dice it, this is not a healthy looking chart. It tells you that this is fixing to break, which obviously we knew that from looking at the low point here, and the pierce here. But again, now we got a sell signal saying if you get confirmation tomorrow, start selling with the stop set here. So all in all, this is still a move that's developing. We still have more downside to come. And again, ultimate oscillator, where's it peaking out at? Not even the 60 line. Quick glance here at the NASDAQ activity I've seen for the past few days doesn't mean darns anything to me, simply because you have the sell signal here, and then the sell day, and an up day, and a sell day, and all of it remains below this point. So what are we looking at? Nothing but sideways moving market activity for a couple of days, kicking, if you will, and we'll end up breaking to the downside, in my opinion. Keeping the stop up here because things can happen. We have an announcement by the Fed or something like that. You could see some more movement, but the main thing is to keep an eye on the high point way up here. If bulls cannot push through this point here, then they're not going to back bears off. And of course, bears want to see this ground taken here so that it will push the bulls away from the table, and that's important again. But keep an eye on it. It'll develop in time, and we'll see it develop. The main thing here, no hammer candlestick formation, no hammer candlestick formation. What do you think is going to happen when it's tested? It's going to give. And where do you think that's going to put you? The 200 period moving average, which is this area here. The XOY oil index, again, it's difficult to get bullish on oil if you're seeing a slowdown, if you're seeing an end to quantitative easing, the things that people are afraid of. If economies start to get weaker, you're not going to see more oil consumption. That's the basic theory. So overall, to see this just come up here and roll over makes a lot of sense to me. Sideways moving activity for the past couple of days, but the overall story is we're rolling over and going lower. Take note of a couple of things, and I've talked about this before when it's happening. When you were having that bull condition and everything was fine, and then you took out that low point, and I said, that's not good. You're not supposed to do that, and not in a bull market. And then you come up here and you find resistance and you sell off, and you're closing below the 50-period moving average, etc., etc. I showed you at that time, other chart from historical perspective, I showed you that we've seen the same conditions in the past, and with those conditions oftentimes will result in another massive move to the upside, trying to push to the upside like everything is back in normal and so forth and so on. Well, it's not. Now you can see this. We came up here, relief rally, and then it started to roll over, and we're going to go back down here and do the exact same thing we've done before. It's going to put us below the 200 period moving average. Again, there's nothing. I cannot find a bullish chart in this market. Quick glance here at the UUP, or the US Bullish Dollar Index Fund. You can see that we are in a massive crash going on here, closing below the 200 period moving average. And again, people don't really understand the importance of these things. Whenever you've got a 50 period moving average and you're in a bullish market, you'll find support there and you'll bounce off of that. When you close below the 50 period moving average, you're indicating a breaking down is beginning to occur. Again, happened the first time, happened a second time. Notice the depth here is more than it was the last time, and then this time much more. These are signs of a topping market, and you can see this again and again go around the globe, and so it's very important to take note of. Typically, whenever you have those conditions, you'll come down and you'll find support at the 200. And when that's happening, that's fine. You've got a big sell-off and then something, you get some kind of a bounce. That's normal. We took advantage of that situation here. But in a situation where you're closing below the 200 period moving average and doing so without any problem, there's no support there, you're indicating a much bigger bearish move than people are even contemplating at this point in time. Again, we told you that was going to happen when you had the massive sell signal at this point before and you started to move lower. Again, the only problem that I have with this chart is that I got stopped out too early. You can see that the little bounce that we had here stopped us out. We didn't get a sell signal. We just gapped down and started moving lower. That'll happen if you keep it stopped too tight. So lesson learned, move forward. Keeping in mind everything I've just shown you on the other chart with regarding the 50 period moving average, what do you see here? We can see a close below, a close below, a close below. What do you think's coming? Close below and moving down to test the 200 period moving average. That's pretty obvious. Again, note the low point here, lower low here. Again, that tells you the same thing. You're breaking down. Higher high doesn't make a bit of difference. It's just an attempt to shake out the bears and start to do something that in this particular case it obviously can't do. It simply rolls back over and we start heading lower. We're looking for this to take out this low point here, close below that, and start to move down to test this low. But in this particular case, you see there's no hammer candlestick off the bottom. Ergo, you'll be looking to take this level out. You'll be moving towards the 888 level, which is 200 period moving average. The SPX, the S&P 500, the same exact overall conditions that I've already shown you on several other charts, and this is nothing new. The overall conditions that we've been seeing, the weakness and so forth and so on, has been pretty much contained everywhere but the U.S. And that's important to note because if you start to see a bigger move and sell-off in the Nikkei and things like that, you could see a game of catch-up being played by the U.S. markets as they realize, oops, we're wrong. We need to solve this problem and lower the prices, and that could put you in a position where you get massive gap to the downside. We're starting to see gaps develop anyway, but it's important to note that. Again, I want to point out in this particular chart, it's been stronger than the others because you had the 50 period moving average. You go over here, you bounce off of it repeatedly here, 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 and now you come down and closed at it, and then we bounced away from it and not very far, and we try to move back toward it. You close below it, and that's all a lot of people are going to need is a sell signal. Again, this is the area that bulls do not want to see lost. If it's lost, then obviously we are breaking down and peaking here, and we will be testing this low. But again, no hammer candlestick formation, so you know what happens. Quick glance here at silver, same basic overall story as gold. Wouldn't be a buyer, wouldn't be a seller either, even though the sell signal is there and you can make some money to the downside. It's not as much as you can make other places, and so this chart has really just not been all that interest to me. There's still money being made, it's just not a great deal of any money, and I could mark a chart, and I will actually, after I'm done with this video, and indicate a black arrow here, confirmation, followed another sell day on Monday, and of course that would be a sell opportunity. But I don't see, unless we get a breakthrough, then we're just actually kind of slowly melting down. It's not really all that impressive on the money making side. Again, I'll point out the same detail. If you want to be a bull on silver or gold, wait for a close above the 50 period moving average. If you can't do that, you're not in a bullish uptrend. Quick glance here at the TSX, the Toronto Stock Exchange, same basic overall story. Everything's doing the exact same thing. Close below the 50 period moving average, bounce back to it, get a sell signal at the point, resistance, we sell off from it, bounce again, sell, and now another thing we talked about back when this happened, humongous sell signal below the 200 period moving average, indicating it's an extremely large bear market. Didn't even get this massive bounce to the upside, doesn't make a bit of difference, you're just rolling over anyway. I'm going to repeat the process, close below the 50 period, and you see this, we talked about that one before it happened, when it was preparing to happen, the cross or the death cross of the 50 period moving below the 200 period moving average indicates bear market by everybody else's standards. It took them a while to get there, but ultimately that's what you're seeing here. And again, if price activity starts to close down at and about the 200 period moving average, then your 50 period moving average, which moves faster than the 200 period, it's going to start moving down below the 200 period on all the other charts we've been looking at. And that would, at that point in time, people would realize, oh, we're going into a bear market. Right here, main thing to point out in the past couple of days, or the past week, I should say, this is how you want to look at these charts. Whenever you get a sell point like that, a sell signal very clearly defined, and you get confirmation, follow the next day, lower, low, lower, high, that's all fine. Any bounce that happens thereafter doesn't make a bit of difference. As long as it stays below this line, it's just bouncing and goofing around, and none of it matters to any of us. We see the signal as clearly sell, and then a matter of time before they go, oops. Quick glance here at the VIX, which runs the inverse of the S&P 500. It means the opposite of. If the S&P 500 is bullish, you'll see the VIX is bearish. And if you see the VIX is bullish, then you should see the S&P is bearish. And this chart's pretty clear. You can see all the price activity is moving up here in this particular direction and doing that bullish uptrend. Ergo, the S&P 500 should be making the bearish condition. Also note the previous high of the April time period, you can see that you are actually tested and broken through that level. That would indicate that you're going to be taking out your lows on the S&P 500 again, so you can see how they correlate to one another. The current activity I see here, nothing important. The main thing here is that you actually have a little bit of a gap below you that may get filled down here between these 2 points, but I'd be looking for a buy opportunity here. All these hammer candlestick formations right here are indicating support is being formed. Previous high is now going to start acting as support, and that's important. You can draw it different ways. You could draw it as a zone, if you will, but this is just what's going on. You come up here, you broke through it, you pull back down again, and this time not as shallow, but you can see that we're still trending up, so this is still a good buy, and ergo a good sell opportunity for the S&P 500. Also note, you're not even in the overbought condition on this chart here, so you're not in the oversold condition on the S&P. Last but not least, the Wilshire 4500, same basic overall chart as the Russell 2000 small cap index, and you can see that we have just come up here after closing below, and then we bounced up here and we attempted to make some kind of rally that really wasn't going to be sustainable, and we're getting pulled down, and we bounce up here and we pull over again, we bounce again. Note that you're finding resistance now at that 50 on the 20 period moving average, the middle Bollinger Band line. Next point will be to close below this 50 period moving average, test this low, and you can see there's no hammer, ergo it's not going to hold. So basically you'd be looking to test the 200 period moving average. Okay, everybody knows what I know. Let's go look at some charts. For those of you who do not know the market charts, those charts I've just shown you, as well as the long-term charts, the 2-year weeklies, my personal charts are kept here on the free website at perfectstockalert.com. You can go there by mousing over the market section and clicking on the market charts, and you'll find my charts. They're updated nightly to show my stop loss limits, where they're at, any signals that I see, any buy signals, sell signals, etc. You can check them out. And, again, 100% free site. All we ask in return, please refer a friend. God bless. Enjoy the weekend, and I will see you all on Monday. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.